Hello everybody, doing here once again from DRFX Forex and Trading. The US Japanese yen has been in a very strong uptrend since 2012, and more recently we see that the market has now attempted to essentially start a reversal in favor of the Japanese yen and possibly start a strong downtrend that will eventually break this outer uptrend line. Here you can see that the market started to move sideways as the uptrend began to stall and rallied for a little while before producing this double top formation that led to the break of this inner trend line and to that carried us towards the outer trend line where we are right now. Now in terms of what we could actually see take place in terms of a movement to either continue the uptrend or start a reversal, here we can see that the market is basically forming a potential bear crown setup. Here you can see that the sideways movement that was formed at this area here could be interpreted to be the left tip or the left shoulder of the formation, with this area here, the double top formation, forming the head or the center tip of the crown. This was then followed by the formation of this sideways movement that led to the formation of this pennant, which is essentially acting as the right tip or the right shoulder of that formation. So if the market is going to obey this formation, which is a very typical formation that you see when the market is going to change direction after a very long trend, then this right tip is eventually going to give way to a bearish breakout below the support boundary as well as below this outer uptrend line. So this will be the first stage that we need to see the market begin the downtrend, and once that is completed, then trading short in favor of the Japanese yen will be your best bet. So taking a look at the formation of this right tip, and let's take a look to see if we can actually find a trading opportunity before this breakout takes place. Now as you can see here, the market has actually attempted to break out above the resistance, but this was eventually followed by a sideways movement that essentially negated this bullish candle. So right now we're in a situation in which the market is moving sideways, and this could actually lead to the formation of a small range or consolidation setup above the resistance boundary here. Now, one or two things can actually take place here. We could actually see the market reverse and provide us with a bearish signal to take us back inside of the consolidation, which essentially would be considered to be, or would be referred to as, a false breakout reversal. That could actually lead to the movement that breaks this support boundary as well as the outer uptrend line and starts a reversal. However, given the fact that we're still in an uptrend and the fact that bear crowns and bull crowns are subject to failing, then this could actually give way to a movement that continues the uptrend in favor of the US dollar with a breakout above the resistance area here. So this could actually be the start of the scenario in which the market in which this bear crown is gonna fail and actually lead to the continuation of this uptrend. So that is another possibility that we could see from this point at this area here. So the market could form a pennant setup or range setup at this area here, provide us with a bullish breakout to continue the overall uptrend, or provide us with a sharp bear crown to initially start a false breakout reversal that takes us back inside of the pennant and then possibly leads to a breakout of the support boundary and the uptrend line to start the downtrend in favor of the Japanese yen. So those are the two possibilities that we could see over the next couple of days. Depending on the size of the candle, we could actually see the candle close at 119.70 thereabouts, and given the distance from or towards the support boundary, that could provide a potential trade of 100 pips. It will be a little bit tight but it is possible. One of the drawbacks, however, of trading this scenario, this situation, or this type of reversal is that as pennants begin to narrow and the distance between support and resistance becomes smaller, the market tends to become a lot volatile. So whenever you see the market providing or just about providing 100 pips in terms of a trading opportunity, it's usually an indication that the market is getting ready to become a lot more volatile and dangerous to trade within the boundary, and is getting closer to breaking out in either direction. So potentially there's a potential trade in terms of when we see a strong bear candle as we head back toward the support boundary. But the risk that is inherent in these types of scenarios is the fact that as the distance between support and resistance narrows, the market tends to become a lot volatile, making these types of trades a lot more riskier than they would otherwise have been earlier on in the formation of the consolidation. So that is why my preference would be for a breakout in either direction. Bullish at this area here and bearish below the support and below the outer uptrend line. So that would be my preference in terms of a trading opportunity on this pair. So trading within this area is going to be difficult, and the best bet would be to wait on a breakout in either direction, above the resistance boundary or below the support and outer uptrend line. So that is what I'm seeing in terms of this pair right now. Uh, Today is Monday, so my estimation is that we could see an indication of what would take place by the end of the week. By that time, by Thursday, Friday, we are likely to see the market provide us with a bull candle or bear candle to start the reversal back inside of support. So let's wait to see what takes place and take it from there. Until then.